And today, we're privileged to have an illustrious panel with us here today. I will start with the lady. Yewande Odumosu is a managing partner at Hawk Ventures, a venture capital fund investing in early stage startups in Africa. She's also an angel investor at Rallycap VC, a global community of angel investors focused on fintech startups in Africa and Latin America. And at Google, she spearheaded the Digital Skills Africa program, impacting over 1 million young Africans. To my right here is Asante Tabete. He's a consultant at BCG, and he's a specialist in matters climate and sustainability, and was a core member of the team that built BCG's perspectives on social impact finance and investing, and is currently also an MBA candidate at INSEAD. To the very far right is Dirk Holzhausen. Dirk is a member of the Africa team at British International Investment, BII, where he's the coverage director for South Central Africa, based in Harare, Victoria Falls. That's a very scenic place. And last but not least, we have Ido Sum, who's a partner at TLCom Capital. TLCom Capital is one of the most active Pan-African venture capital firms. And he also holds an MBA from Stanford GSP. And well, just to mention, Dirk is also he's an Oxford alum. He was here in his MBA 10 years ago. So we're very happy to have you all. To just start us off, well, I think everyone loves stories. And turning to you, Ido, you recently gave a talk at a TEDx event, and the title of your talk was The World Needs Africa. And you mentioned how you landed in Nairobi as a 20-something-year-old grad, and how your journey started from there. So I would like you to just briefly share with the audience today, how did you end up as a venture capitalist in Africa? What attracted you to this space?
Sure, thanks. Thanks for the invite. I'm very happy to be here. I guess in short, I came from the entrepreneurial side of things, so I used to and still love today to build things rather than just invest in them. So I started my career in Israel, which is where I'm from, in the early days of the tech boom in the early 2000s, building a couple of for-profit and not-for-profit organizations at home. And when we were graduating from university, a very close friend of mine and myself, we were looking for something interesting to do and learning about the very fast-growing telcos in Africa in 2005-06. We thought that maybe fast internet is something that could be of interest to the continent, and with that we embarked on a journey to try and build one of these, a wireless internet provider in East Africa. Miserably failed with the rest of the global economy in 2008. I couldn't fundraise any further, and then decided that I need to learn how people raise money because I never was able to crack how decisions about investing or not investing as were taken. So decided to shift for a couple of years and try and do VC in Africa to discover that it wasn't a thing. There was literally no one doing it in 2010. And had the luck of bumping into Maurizio, who had run and founded and ran TLCom at that point in time, investing in Europe, in European VC. He wanted to do something in Africa, wasn't too sure what it entails. I wanted to do the same, and we decided to explore it together. So that was 13 years ago, and we've been on that since.
Brilliant. And Yewande, I would like to ask you the same question. You are an electrical and electronics engineer. You have worked with some of the biggest firms, Vodacom. You've worked with Google. I think you've been a power plant engineer at some point in your life. So please just share with us why VC, why not engineering, why VC, and why Africa?
Okay, thank you for that. As Ilya was speaking, I was like, I had my answer, but I was like, how do I answer this? I think one was curiosity, and second was young people. The most important was impact. So curiosity led me from studying engineering to working in corporate. So I'd worked in Vodacom, I'd worked in Google, but I was always curious and attracted to young people. I was young myself, and I was just looking for other young people to start in things. When I was in university, I wanted to start like my first major startup. Then the telcos had just come, and so I was neighbors with someone at Obafemi Awolowo University, and he had introduced me to 3 different guys, very smart guys, and we were supposed to start a company, but I think at the time we were supposed to split share or something. It fell apart, and I remember the lawyer saying, you know what, take your time to find out and build something else later. And so I was always curious about how companies have started, but I didn't really have a formal entrepreneur in my family, and so the path was corporate. While I was in corporate, while I was in Vodacom, I started thinking about finding something to do. I just was restless. And I think by then, we had new companies. We had Paystack, we had Flutterwave, we had Paga. I was living in a place called Yaba then. And I remember saying, I'm just going to quit my job and go and work with these guys. But I didn't at that point. And for me, I started thinking about how do companies, really become big, And then I think I took a gap year after Google. And I was working in this co-working space where there were like young entrepreneurs coming. And I met a young entrepreneur, and he was telling me about his startup. He was asking me for advice. Obviously, I'd worked in corporate, so 90% of what he had asked me I already knew. Governance, registration, legal, like almost everything. I was like, how come you guys don't know this? But then he knew about software engineering. He knew about things that I wasn't really familiar with. And then I wanted to invest in that startup, but I didn't end up investing. And then years down the line, I think in 2019, I ended up working in a venture-backed startup called Nithio. They just, I think, raised $30 million for both debt and equity. And I think that was one of the best jobs I've ever had in my life. But it was on the debt side of things. We were deploying capital debt to companies, important problems, renewable energy, agriculture. And the thesis was to be able to efficiently deploy capital using technology and things we'd learned. And I really loved the job, but then something was just pulling me away to the equity side of things, because in debt, you're working with the entrepreneurs, but it's a different kind of relationship than being an equity investor. Being an equity investor is almost like you're on the same side. Being a debt investor is almost like you're on the other side of the table. And so I started angel investing. I started with RallyCap. I think I joined First Check. I joined Techstars Rising Fund because I wanted some international exposure. I joined Hook. So Hook had started a syndicate. Hook started by two young men in Stripe. When Stripe bought Paystack, they had been exposed to that, and they started syndicating deals. So I joined that. And all through that, I figured out what was missing, which was I needed to be on the same side with entrepreneurs. I'd done a startup myself. We never raised money, but we got acquired early. And it was just that missing piece. And so that's why I said curiosity led me there. And I think for me, VC had the biggest impact in what I wanted to do, to be able to unlock potential for young Africans and to be able to support them to grow. That's how I ended up here.
Great. Those are beautiful stories. I hope some of the MBAs who are still explorers, I hope you're starting to see some of the paths that you can take. So let's just delve into the VC ecosystem in Africa. So last year, the African venture capital ecosystem experienced a notable contraction. Investments declined to $3.5 billion across 547 deals. And this was the first decline in about 8 years. And it was quite a huge decline, 46% drop from the previous year. And this phenomenon just prompted a reevaluation of strategies for startups, for entrepreneurs. And a question I would like to ask Ido first is, what do you think about this? You have been in this space for nearly 2 decades now. You've seen the ups and downs, and last year was one huge down. Would you say that the best days are behind us, or is there hope for a rebound in 2024 and beyond?
I don't think we'll see a rebound in 24, but that's not to say that the best days are behind us. I guess, we discovered something very new last year, that life aren't linear up and to the right, which is really shocking. But for those of us who are slightly older than 25, it happened before. I don't want to shock anyone, but it happened, many times in many industries over many hundreds of years, and we are seeing one of these. What actually wasn't very sensible is what happened in the 2 years before that. So I would argue that we are sort of back on a more realistic trend line rather than the just very, you could call it in many names, but unrealistic / stupid jump we had seen in 21, 22, which, free money, people that would really, really push to invest because there was free money and you had to spend it, doing very little work to justify those investments, and then everyone became entrepreneurs because it was easier than any other job. And the mixture of that wasn't healthy. So I don't think the best days are behind us. Quite on the contrary, I think that, to me, 23, 24 will be the years of realism, and realism is a very healthy thing. It really helps you remember what you're trying to build and be very focused on what you're building. So the needs are still there. The problems, if you want to call them like that, are still there to be solved. Not all by technology, by the way, but definitely some. The population is growing extremely fast. It's the youngest continent on planet Earth. It's a potential next source of working people to the planet, and so on and so forth. So lots of positives that are all still there. We shouldn't be it's okay. The world didn't end, and we will survive.
Amazing. That's really encouraging to hear. A very optimistic view, and that we are back to reality. So just on the same note, Asante, I would like to just I'd like you to share a bit about something that we're seeing in the private capital market space in Africa. And the interesting trend is that fintech has been at the top of the charts. Yewande, you mentioned some of the household names here. And we're now seeing a rise in climate financing. We're now seeing the numbers on clean tech going up. Asante, what do you think are some of the factors behind this? How is that space shaping up? I know Ido did mention that sometimes there's always just too much money flowing in a certain direction and everyone just tries to ride the wave. What do you think about this space, climate financing, also social finance, where you have lots of expertise in? How is the landscape?
First of all, I just want to say thank you all for having me. It's an honor to be here, and speakers have been incredible. I've been truly inspired by the conversations I had with them and the university students and faculty. And I think to answer your question, there's 2 main drivers behind it. The first one is that there's a strong innovation pipeline when it comes to clean tech and climate tech in Africa. First of all, the continent as a whole, because of the environment, is a great place for clean tech and climate tech. Secondly, clean tech and climate tech directly addresses key issues on the continent, such as food security, water security, energy security. And I think the second driver is that it's fundamentally easier to raise capital for investment into clean tech and climate tech. Because there are a broad range of financial, economic, and social benefits from it, it attracts a broad range of investors. And a lot of the investors that venture capitalists are getting their money from, the DFIs, philanthropists, and pension funds, are mandated to allocate a certain portion of their investments to social impact and climate and sustainability. So that just makes it easier to raise capital for those causes.
Nice.
Can I maybe just add 2 thoughts there? So
Yes.
I think you're so right. I think climate finance, the transformation has been amazing in our markets. 5 years ago at BII, we did a lot of work in the renewable energy space, but we didn't necessarily bucket it under climate finance. But as we go forward, at least a third of our investments will be in the climate finance space. So this is a huge amount of capital that we're going to see heading towards Africa. I think, one more point on the climate piece that links to this narrative and changing the narrative that we've been talking about. If you take a country like Zambia, with a new administration, a new government, one of the new ministries that the president created when he came into power was a Ministry of Green Economy. So a Ministry of SME was the other ministry, but you also have a Ministry of Green Economy. So there's a clear focus from many of our countries on this critical space. And a market like Zambia, they have 90% plus green energy baseload. There's many countries in the world that would dream of having 90% plus green energy baseload. So in some areas, when you have a country like Zambia going to a COP, they are leading the way in many areas. Of course, there's a lot more finance, there's a lot more renewable energy, we need a lot more power on the continent. But it's also important to think about the context and where each country is starting from.
Amazing, thank you, Doug. And I think you actually just preempted my question to you. BII is one of the investors, of course, that has been active on the continent for a long time. And Ido just mentioned that there is some optimism because Asante has shared these insights around climate financing and what's going on there. And I'm just curious from your perspective as an impact investor, as a DFI, BII, what are some of the emerging narratives and trends, and what is really shaping your investment thesis at the moment, and still giving you a reason to invest in the continent in VC?
Yeah, sure. So BI has been investing in Africa for 75 years. So it's seen the cycles, it's seen the ups and downs. I'm biased. I'm always optimistic about the continent. I believe in the medium term. I think we've got challenges in the short term, but I'm always optimistic about the future. And I think if you're looking at places to work or to spend time, there's nowhere more exciting than Africa to be spending the next period of your life, of your careers. And I think for us at BII, I don't think capital is necessarily the constraint. I think it's sometimes the kind of capital or matchmaking the right type of capital with the opportunities that we see. I think the greatest development challenge on the continent is very simply jobs. And I think we've talked about it a couple of times. Earlier yesterday, the continent is growing fast. Our populations are growing quickly, and our economies are not growing fast enough. And I think we need to create a lot of jobs on the continent. And for us as DFIs, we invest through the private sector. So that is our channel. So we need to constantly be asking ourselves, how do we support jobs? How do we support business growth? And where can we create that kind of growth? And I think that's where it's really important to constantly be innovative. We cannot stand still. And I think there's a number of channels that we use to invest into these markets. We do a lot with the banks. We partner with the banks. The banks fund the growth of the private sector. We fund a lot of the private equity firms, a lot of the VC funds. That's also a critical channel. But again, there's more to be done. And I think there's a whole range of topics that we can discuss around local currency financing, or how do we mobilize pension funds in our own market so the pension funds are actually investing in the real economy in our countries. We're not relying on capital coming from abroad to fund the growth of Africa. A lot of our pension funds have vast sums of money. It's just not going into the real economy at the moment. We could talk about the type of investments that we're making, whether it's debt or whether it's equity. You know, one of the challenges we've seen in private equity over the last decades is exits. It's one thing making investments in Africa and helping companies grow, but how you realize equity exits is something that Ido can talk to. It's tough. So I think constantly innovating, and I think Africa is one of those places where there's incredible opportunity, and you can do so much that in many other markets in the world, you're going to be constrained. But I think there's huge opportunity on our continent.
Thank you. I think we'll park the conversation on exits and come back to it. And of course, before you exit, you've got to at least first make the investment and grow it. And I'll turn to you, Yewande, just to give us a view of what's happening with angel investors, with people who actually believe in the ideas at a very early stage. Well, they always say one of the some of the sources of financing for companies are family, friends, and fools. So just happy to hear about what's happening at the very early stage.
Yeah, that's a good question. So I think over the last 3 to 5 years, I think we've had so many investments than before, especially so many early investments. We've had different syndicates, different angel investors, take more steps in investing. That's resulted in some wins and a lot of failures, but also a lot of learnings. I think a lot of angel investors have also learned what to do and what not to do, and they're still learning. I think that in the history of our ecosystem on the continent, I don't think we've had enough data points as we have right now on things that work and things that will not work. I think that in the past we've struggled with adapting to things for the market. On one hand, you build technology. A lot of young people are building, and they think product first, technology first. They're not thinking about markets. They're not thinking about regulation. They're not thinking about stakeholders. They're not thinking about consumers. They're just thinking about apps and going there. And a lot of angels had felt for some reason they would figure it out, but that support to figure it out wasn't really there. So a lot of angel investors are understanding that, I can deploy capital, but also, if I can, support these young entrepreneurs, provide them access, guide them, instill governance concepts, early on. There has to be some governance with managing money. A lot of young entrepreneurs, I think, didn't deeply understand being custodians of capital. Didn't really understand, what the opportunity presented to them was, especially as Africans, you're expected to do more, even if you're going to fail, there's this expectation of failing forward in a way that, you have moved the needle, even if you don't become a unicorn, even if you don't become a successful venture, you've been able to change things that can catalyze things for other people. So angels are still investing, but they're just requiring more conviction. They're requiring more structure. They're requiring more information before they do that investment. A lot of structures are also being put in place, to support founders, to support early teams, in being able to be sustainable until late stage. For us, example, we try to collaborate and do more with later stage investors to be able to align better and help teams be more investment worthy at growth stage. We're doing more of that now. I think also personally, most of us here will probably be more accessible to young people to be able to answer questions. I think people just assume that young people know. Unfortunately, they don't know. Some of them have never worked in corporate. Some of them don't really understand the fundamentals. When you say business, if you worked between 2003 2000 and 2000 and maybe 15, you probably would be familiar with a lot of like governance, corporates, you know. But if from 2015 till now, a lot of young people didn't have access to those things, and they aren't really guided, or they weren't really guided the way, because people just assumed that, oh, if I give you $2 million, you're not just going to do something stupid with it. Do you get? So angels are still investing, it's just slower. People are just expecting more. People are doing more due diligence. People are getting more referrals. Luckily for the continent, a lot of business school people, a lot of operators, a lot of people that work in corporate are also taking, you know, that courage to start something. So I think that's brilliant as well. And there's a lot of, like I said, there's a lot of insights, a lot of information that people can now leverage to see, you know, what's working, what's not working. Yeah. So it's positive still.
Yes, it's a very positive perspective. It's really encouraging to see that you're working on hand-holding these entrepreneurs and getting them to a stage where now Edo can take on them. And I think I'll just come back to the conversation, because Doug, you're sitting on the LP side. You're an investor. You know, you're looking to give Edo some money, and
we've given him money.
Well, when you have glad that it's not hypothetical at all. So, but we had this conversation earlier, and the question of exits always comes into play. And of course, you want to have a view of, you know, when you can get a return, when you can get money back, what type of return that would be. So, what is really the challenge around exits? Is it that we have a rigid structure when it comes to funds, and maybe we need something more practical for Africa? What do you think is the biggest challenge here, and what can be done about it? Maybe I'll start with Doug and then Edo next.
Yeah, sure. I think at least when we talk about private equity and private equity fund structures, in many ways we're stuck in the past. We're kind of in 1980s US investing mindset. You know, we still use a 2 and 20, you know, private equity model, and I think we need to move forward. A lot of the continent needs patient capital. It needs long-term capital, and I think the current structures that we use are not always fit for purpose. And I think a lot of that rests with the LPs, with the investors. If you speak to the fund managers or the GPs who are raising funds, they often would love to have longer term structures or evergreen vehicles or permanent vehicles. But they just know that fundraising is a slog, and it's easier to kind of go what people have known for the last 10, 20, 30 years, because that's the faster path to raising capital. We are starting to see that changing. I mean, at BII, we've just built a new permanent capital vehicle. We've just launched the first of these companies in Ghana. I'm busy replicating that now in Zambia. And these are new investment companies that are set up at a country level that are there to last 50 years plus. So this is evergreen funding that can help grow businesses over decades, not over a limited life fund structure. That's such an artificial time period. There's lots of good things that come with that limited life fund. It does put pressure and cadence on the teams to deliver. But I think we need to be more innovative about how we fund the growth of the continent.
Edo, what do you think? Would you love an evergreen fund?
You know, generally speaking, I think that there's definitely room for considering different models. With that, we are still at the phase where the proof is on us, the burden to prove is on us. We're still playing realistically in a world with an extremely limited interest from the world in what we do. Even in our boom year, we were sub 1% of global VC allocation, and we are scratching, so we're closer to 0.5, I think, this year. So we have a very simple job description. It's take $1 and give back $3-ish in round terms. the rest is noise. This is what, we're not saving the world. We're not making it a better place. We need to take $1 and give back $3. The rest comes after that. That is the job description. And until we're unable to show that we can do it systematically, these discussions are very, very challenging. To Dirk's point, we need to raise capital from people who have enough interest, enough capital, enough resources, and so on. Right now, we're still sitting as an industry, probably on about 2/3 plus DFI contribution. DFIs are fantastic on many fronts. Innovation typically is not one of them. Or speed, it's not innovation, very innovative, but not necessarily
Speed.
very quick. And while some are extremely open, and I think it's super exciting to hear, some are not yet there, let me put it this way. And we need to manage a wide base of LPs. So I think we need longer fund terms. The world is moving to 12 to 15-year funds, not in Africa, in Israel, in the US, in Europe. So I think we will need to migrate towards that. There is a realism into this industry that takes 12 years to build a company, assuming you don't invest in everything on day one, but you also invest in year 3 and 4. These are the horizons you're looking at. But between where we are to completely reformulating structures, there is some time. I think we will need to inject local debt structures into some of the funds because we are using very expensive FX equity to fund working capital in local currency, which is really, really hard to overcome, especially in such devaluating markets. So this is something that some of us managers will need to implement. There's some few innovations, I think, in the way before we jump into completely different fund structures. But with time, yes, we will need to migrate a little bit.
Can I just add on the FX points? I think the FX piece is critical for our markets because the international investors are looking for dollar returns. So a fund manager can work incredibly hard for 10 years, build some great businesses, the FX moves against you, and you're the wrong side of the return hurdle. And I think that goes back to we need to unlock local pools of capital in our markets because a pension fund is targeting inflation plus a margin. So that's what they need to do. That is their job. And so I think how we think about unlocking and mobilizing local pools of capital to actually invest into our own economies is critically important for this next phase of growth. And the DFIs and other international investors can help catalyze and can bring the experience and the skill set. But I think we need to see a lot more on the local capital bases actually coming into the markets.
Great, that's a wonderful perspective. Still on the same point, switching a bit to just look deeper at the regulations space. Asante, because the previous speaker just mentioned, really reiterated the need to engage, work with governments, regulators. What do you think are some headwinds or some tailwinds that we have in that space, in the regulatory environment, in the policy environment? Because we've heard a bit about currency there, but do we have anything positive going on the regulation side or the policy side, and what does it mean for venture capital?
So from the regulatory perspective, I'll kind of do it from a climate lens because there's a lot going on in that space. First of all, I think the question is very difficult just because Africa is still very fragmented. And we've got 54 different countries with different cultures, different policies and regulations. So any regulation that would create some uniformity from there, I think would make it easier to scale businesses within Africa in different countries, which would make it more attractive to invest fundamentally. But on a broader scale, especially in climate, I think the implementation of Article 6 of the Paris Agreement in particular would have a big impact on the funds flowing into Africa. And basically, Article 6 of the Paris Agreement would create a global carbon credits market where countries can voluntarily trade credits between each other. And because developing carbon credits in Africa would be so much cheaper than doing it in Europe, for example, there would be a lot of capital flowing into Africa to develop those projects. On the African side, though, I think every country would have the mandate to decide whether or not they want to participate. And if a country decides they don't want to participate down the line, the uncertainty around whether or not they will deter investors from actually putting the capital in there. So I think the developments of that over the next few years will really shape the investment into climate tech in particular.
Wow, all right, that's really quite insightful.
So I just wanted to add, and even things as small as, border requirements like entering into the country. I think the previous speaker spoke about, just being able to go there and see.
Yeah.
So for example, the Rwanda government last year said, they're scrapping the visa requirements and it's visa on arrival. And you could see the inflow of people. You could see the inflow of people. I myself, I myself, so little things like that, really carry weight. I went to Rwanda myself. I think I was one of the first people to try that, and I was so happy. And then obviously there are a lot of investors that went. Rwanda is like booming. I also went to Uganda. I think they're thinking of adopting that. I think, Kenya is trying to improve theirs, but it's also like an e-visa. So even things like that helps, have people on ground, come visit, come discuss, come, collaborate. And then on the higher level, there are other incentives, like what he said. So I just wanted to mention that.
Sure. So even I think it will be injustice for us not to talk about this, especially this weekend, having just celebrated International Women's Day, and of course Mother's Day tomorrow. Yeah. So just focusing on the gender finance gap that we have in venture capital. We know this is not really an African problem. We heard from a speaker yesterday that even in the UK, probably was it 0.6 or 0.06 of capital actually goes to female founders. I think black female founders. It was a very, very low figure, very sad figure. What do you think can be done in this space, or what has worked well? And what do we still need to do to make sure that we're bridging the gap when it comes to financing?
I think that's one area that's still very, very, very challenging. I think, a lot of people, male and female, are really working hard to catalyze the increase of investment in, female founders or female teams. I think what has helped so far is just providing access, access to networks and to the funding. But I also believe that because it's really deeply rooted and there are different layers of support that is required, I think, being able to identify the different layers, get, more women into different levels and just not say it, but actually support is very, very important. I think it has improved. So for example, like I said, there are now like female funds or female first funds, like First Check is doing something with Telkom, and obviously if you don't want to speak about that. But I think it's still very challenging. I don't think we have like a one-fits-all answer for that, but I think that, just providing more support, more investment, helping women become more investment ready, like being specifically going out of your way to do that. For example, I know that the big corporates do it, but I think they're doing it more. So for example, there's a Google for Startup Women in AI, and I'm privileged to be able to mentor in that very soon. And just being deliberate about still supporting women. You cannot over-invest in women when the numbers are showing that they're underinvested. So just doing more in that direction is very important.
Amazing. So we really have touched on many topics, and I would have loved to go just deeper into each of those and just unpack them a little more. But I guess we'll be able to do that during the coffee break. Just speak to the speakers and just go. They really shared a lot, and we can generally like unpack that further. I would just have to take some questions from the audience now. A question here around funding model. I think it already mentioned the structures that need to change. And there is a question from Maro who asks, Ido, how have you been able to navigate the balance between impact investment and financial return? For capital provided in foreign currency, have you experienced challenges in financial returns, and how do you navigate this? Maybe, Doug, you probably would like to respond to this one. I know we spoke about it a bit, but yeah.
Yeah. I mean,
how do you balance between impact and financial return?
So for the DFIs, every investment we make, we look at through two lenses. So the first lens is an impact lens. So there needs to be an impact thesis behind everything we're doing, whether that's adding gigawatts to the grid, whether it's creating jobs, whether it's boosting gender equality in the markets, whether it's focused on climate, food security. But there needs to be an impact thesis first. And then alongside that, we need to see commercial returns. So if we're going to see this become sustainable, that dollar that you invest, that Ido talks about, you need to make sure that you can get back that dollar so that you can keep recycling it, so that you can keep doing this. So those two lenses go alongside each other, and it's critical to think of both of them.
There's a question here from Okemidi on clean tech. It says clean tech has accounted for a large portion of total debt funding to startups in Africa. Generally, how do you see this trend affecting the sector in future? Asante, I think you sort of shared something on that. What else do you see in the future in this space?
In what sense?
Clean tech is growing. Do you see any other trends in the future?
So let me know if I don't actually answer the question. But I think going forward, there's two big opportunities in clean tech. I think the first is just data. It's as venture capitalists try to reduce risks because the interest rates are going up, the importance of actually being able to track and have data, for example, for like crop yields for smallholder farmers and agri-tech and so on, will really enable them to make the decisions for investments. And then secondly, I think there's a massive opportunity in energy. I'm a little bit biased with this one, but I think energy has direct and indirect financial benefits, which will drive investment into the sector. From a direct perspective, there's a clear energy undersupply in Africa, which means that there's a relatively large inelastic demand. And to Shawnee's point yesterday, because of the undersupply, if you can generate energy and do it well, you will make money in Africa. And then the indirect benefits. Having the energy in Africa will allow our businesses to stay operational, which drives economic growth, which reduces Africa's risk profile, which then drives in more capital, and the returns required will be lower because the risk's lower, which makes it a lot easier to actually put your dollar into the market.
Great. Ladies and gentlemen, we'll close at that point. I'm conscious that I'm standing between you and a very well-deserved coffee break. So please give a round of applause to our wonderful panelists. Yeah. Thank you very much.